Hey guys, welcome back to Trader DNA. Today, I'm thrilled to bring you an incredibly effective scalping strategy that's not only simple to grasp, but also delivers impressive results. This strategy has been carefully crafted to offer you a competitive advantage in the market and boasts a pretty impressive win-rate ratio. However, before we delve into the details of this strategy, I'd like to kindly request your support by hitting the subscribe button and turning on the notification bell. By doing so, you'll stay updated on all the latest videos we release, ensuring you never miss out on valuable insights and strategies. Alright, without further ado, let's get straight into the video. In executing this scalping strategy, I'll be harnessing the power of 3 exponential moving average, or EMA indicators. The 34-period EMA, the 68-period EMA, and the 136-period EMA. This combination forms the cornerstone of my trading approach, drawing from years of experience navigating the dynamic markets. My intention is to apply these indicators on a 1-minute time frame chart or 5-minute time frame chart, a choice informed by the strategy's responsiveness to short-term price movements. Drawing from my experience as a trader, I have found that this combination of EMA periods works exceptionally well for my trading approach. While these periods might not enjoy widespread popularity among novice traders, I firmly believe that the secret techniques and configurations often yield the most favorable results. Therefore, this is the best strategy I am opting to share with you. The initial phase of this trading strategy entails discerning the prevailing market trend, a critical determinant of our trading decisions. This task is accomplished through a thorough examination of the exponential moving average, or EMA lines. To ascertain a clear trend direction, we seek alignment among all 3 EMA lines, with each exhibiting consistent movement in a unified direction. Ideally, these lines should be visibly spaced apart, reflecting a robust and sustained trend momentum. We steer clear of markets characterized by erratic EMA movements, indicative of a sideways or ranging market environment. Such conditions pose inherent challenges for scalpers, as price movements lack clear direction and stability. Moreover, we exercise caution against entering trades in markets where EMA lines intersect, as this often signifies indecision and potential reversal signals. Our overarching goal is to identify markets where all 3 EMA indicators harmoniously align, reinforcing our confidence in the prevailing trend direction and enhancing the probability of successful trade executions. The position of the candle is also crucial. You should seek setups where the candle completely sits outside the 34-period EMA. Once this setup is identified, our focus shifts to pinpointing the precise entry signal. This occurs when the price retraces and concludes a session below either the 34-period EMA or the 68-period EMA. As you can see in this chart, an uptrend scenario, denoted by upward sloping EMA lines and candles positioned above them, we patiently await a price retracement, signaling an opportune entry point. Subsequently, our attention turns to the price's behavior in relation to the 34-period EMA or 68-period EMA. Upon its return to this level, we execute a buy position, capitalizing on the potential resumption of the prevailing uptrend. However, if the price drops significantly and closes below the 136-period EMA, we will have to be more careful with all existing setups. This is because the market has great potential for trend reversals, so it requires a careful approach to avoid undue losses. By diligently adhering to these sequential steps and remaining vigilant of market dynamics, we position ourselves for informed and strategic trading decisions, enhancing the likelihood of favorable outcomes in our scalping endeavors. Now, let's discuss our exit strategy. Suppose we've entered a buy position here. Our next step is to set our stop loss at the 34-period EMA. As for our profit target, we'll set it at 1.5 times our stop loss. On this chart, we can observe that the market is in an uptrend. As indicated by the 3 upward sloping EMA lines, with all candles positioned above them, we anticipate a pullback towards either the 34-period EMA or the 68-period EMA. However, it's crucial to remember that the price should not breach below the 136-period EMA. So, once the pullback occurs, the next step is to wait for the price to reverse and return to the 34-period EMA. Once this reversal happens, we can enter a buy position. Then, we set our take profit and stop loss accordingly. As you can see, the price eventually reaches our profit target, making this setup a successful trade. Let's explore another example. In this chart, we can identify a bearish trend or downtrend, evident from the 3 downward sloping EMA lines, with all candles positioned below them. Next, we await a pullback towards the 34-period EMA or the 68-period EMA. And remember, during the pullback, the price should not surpass the 136-period EMA. So, once the pullback occurs, we wait for the price to return to the 34-period EMA. When that happens, we can initiate a sell position here. Then, we set our profit target and stop-loss levels. And, as you can see, the price reaches our profit target, making this trade ultimately profitable. So, that's how we trade scalping with this triple EMA strategy. However, it's important to remember that there's no holy grail strategy with 100% accuracy. My suggestion is to conduct a backtest first before you utilize this strategy. Now, as a bonus, I'll share with you another highly profitable strategy. For the next strategy, I'll be using a combination of the 34-period RSI, 34-period EMA, and engulfing patterns. So, here's how the strategy works. First, for our RSI, we'll set trend level lines, namely level 52 and level 48. Now, we have 2 lines within the RSI range. Next, I'll use a 1-minute time frame. Now, for our entry settings. If the price is above the 34-period EMA, while the candle shows a bullish engulfing pattern, and the RSI is above the 52 level line, then we'll take a buy position. The same principle applies to the seller bearish position. If the price is below the 34-period EMA, while the candle displays a bearish engulfing pattern, and the RSI line is below the 48 level line, then we can initiate a sell position. Now that you've learned about the highly profitable scalping strategy, it's important to understand that the combination of moving average and RSI indicators in this strategy is quite special. This strategy can also be applied to intraday and swing trading. The key is to remain disciplined in following the established trading rules. Since this strategy utilizes indicators commonly found on all trading platforms, you can easily customize settings on whichever platform you use. Remember, consistency and adherence to your trading plan are crucial for success in implementing this strategy effectively. However, if you want to use the exact settings shown in the video, I've included a template with the system. Just upload it to your chart, and it will automatically plot all the indicators perfectly on your charts, so there's nothing to worry about. You can find the download link in the description. Now, I'll give you 5 quick tips to help you become a better scalper. The first tip is, you don't need to take every trade at once. When scalping, you'll encounter situations where you receive many entry signals. If this happens, you don't need to take them all. Only take positions that you can manage because handling multiple trades at once can be very difficult, especially when scalping. The second tip is, don't risk too much of your capital. My advice is to never risk more than 1% of your capital per trade. I recommend risking only 0.5% on each trade. The third tip is knowing when to stop trading. Because when scalping, we often don't realize that it can consume hours of our time. And the longer it takes, the more tired we become, and we start to lose focus. So, it's crucial to know when to take breaks. Personally, I limit my scalping time to a maximum of 4 hours per day. You don't need to worry about missing entry signals as there will always be other opportunities in the market. The fourth tip is to ensure you use a broker with low spreads. This is essential because when scalping, every pip counts. If you use a broker with wide spreads, you'll struggle to make a profit. And the final tip is to focus on one market only. When scalping, entry signals can appear very frequently. So, you don't need to worry about missing entry signals from other markets. Just use one market that you feel comfortable with and stay focused on trading it. So now you know 2 simple yet highly profitable scalping strategies. You can test and practice them right away. I hope our discussion today has broadened your insights. And if you found this video helpful, please take a few seconds to click like, subscribe, and hit the notification bell, because there will always be new videos from this channel. Don't forget to share this video across your WhatsApp, Facebook accounts, or X to show your support. Thank you for watching until the end, and see you in the next video.